Give it up for Danielle DiMartino.
Danielle DiMartino.
Danielle DiMartino Booth. So we want to break in here because Jay Powell is certainly being pressed on exactly why the cut, why the need for a cut today. Also, just how much are they assuming these new policies will be inflationary? Danielle DiMartino Booth, Ali McCartney, and Francis Donald with us. Francis, you're saying that you think they're trying to have their cake and eat it too.
Yeah, or maybe a more generous observation would be that they're trying to inject optimality. Chair Powell starts with the economy is strong, but also we need to cut interest rates. He says inflation is coming down, but not as much as we want. And then he says we can dial back more slowly or we can accelerate cuts. So clearly reads to me as not having a lot of confidence in their outlook. And maybe that's appropriate. We've had significant data distortions from weather to revisions. Danielle, You've been all over that. We, of course, know that there's policy that can be very disruptive. They say they're not incorporating policy, but I tell you, they're going to bed thinking about it at night. And then lastly, a lot of those economic models been breaking down. To me, it reads as a hold. Can we just hold the line for another 30 days, try to get a sense of what's going on type of statement?
When you're data dependent and the data is revised at the pace it's been revised, it's hard to really have any sign of secure footing. By the way, you picked up on that dark room full of furniture line that they used once before back when inflation was a consideration, right?
That's right. Chair Powell bringing out some oldies but goodies when it comes to metaphors. One from 2018, when the room is dark and it has lots of furniture, you turn off the light, you have to go more slowly. A lot of language today about going more slowly, more cautiously. This is a Fed that's trying to buy time.
Before you even started speaking, Ali, you picked up on that. You said you think the Fed is afraid of what may happen with respect to fiscal policy.
Look, and they should be in terms of extended timing, right? As you said, their data is breaking down. He used the term inflation has fallen apart from what we thought at the beginning of the year to the end. That may be the most sort of aggressive, culpable language we've ever heard him use. And then we're talking about, the extent he just took back from 4 to 2 to match the market, and the timing, in the reverse. And then, it's 150 basis points between what neutral is from the top dot to the bottom dot. I just heard Danielle say that that's the largest range we've seen in a long time. Yep. So you can drive a truck through the range. It's getting wider and wider. Timing, we knew they weren't going to go in January because of the presidential transition. Right. That's gone from about 11% odds probably to 8.6 now. March now looking, 40-ish. It could be second quarter, it could be third quarter, it could be not at all.
Danielle?
All I know is that their end-of-the-year unemployment rate projection for this year implies that we're going to go from 4.246 to 4.200. They've taken that down despite the fact that in the month of November, all you had to revise the unemployment rate up by was 7,100 employees total, and you would have gotten that 4.3 top-tick print for the post-pandemic era. And yet they're suggesting that this economy, effectively, because of where their median projection for the unemployment rate is actually heating up in terms of jobs being created.
The chart you and I had with the folks not being able to.
You're not seeing it with people. If you lose your job, good luck finding another one.
Right.
Because, again, we're at 10.5 weeks, median duration of employment, highest since October 2008. It ain't easy out there if you lose your job.
How surprising is it right now, the muted response so far from the market? Not a big sell-off, not a big rally. I mean, is the market confused because the Fed is confused?
I think the market's been saying the exact same thing for a very long time. First of all, the Fed is coming to where the market was pointing them.
Right.
And any strategist you talk to, whether on the political, Wall Street, any side, is saying we need more information. The first quarter is going to be telling and quiet.
Real quick, Francis, the greatest risk then. He starts off, says they're both equal. They're two goals, they're two mandates. Which one is at a greater risk right now, losing control of the jobs market or spiking inflation?
The greatest risk is both. It's a stagflationary outcome. So many of the policies that we've heard coming forward have inflationary elements and are problematic for growth. That's what tariffs tend to do historically. What I'm concerned about is not a Fed that faces higher inflation. They know what to do with that. Or a Fed that sees the unemployment rate rise. They know what to do with that. Powell said we have two options. What does a central bank do if inflation remains sticky for a wide range of reasons, but that labor market deteriorates? Yep. That is the biggest risk for the Federal Reserve. That's why you're hearing about optionality like crazy, and I think that's why this Fed is nervous.
Yeah. All right, let's go back to Jay Powell.